Well, we are at a critical moment in the debate over where the economy is going. Once again, FedEx finds itself as a critical barometer in the discussion. It does have its earnings report out tomorrow morning, but ahead of that, our markets editor Andy Cinco is following the story. Andy.
Deirdre, do you remember the last time FedEx was out with its earnings? That day happened to be March 19th, which was, of course, just days after the stock market itself had found its bottom on March 9th. But, you know, if you remember, Deirdre, we were still grappling with where exactly was the economy going. And when FedEx came out on March 19th, its comments certainly helped to foster this green sprouts or green shoots debate, because remember what it said on that day. Those executives said, quote, they did not expect further significant decline in the U.S. economy this year. And so when the earnings report comes out tomorrow, Deirdre, here we are sitting wondering whether the U.S. economy really has a lot of legs. And so we'll be watching their comments very closely. But this is a couple of key things that is going on here, is that FedEx has some real sort of problems ahead of it, and it's not quite clear how well its earnings will be tomorrow, because just take a look at what has happened since that fateful day in March to jet fuel costs. Come inside the Bloomberg terminal and we'll explain to you what's happened here. This is fiscal third quarter jet fuel prices, and you can see it's just declining. It's an easy read. Now in fiscal 4Q, things were flat and then took off at the end, and so with jet fuel prices up about 25% since it reported in March, Morgan Keegan analyst Art Hatfield and Jessup and Lamont analyst Helene Becker both say that FedEx was not able to put in those fuel surcharges, Deirdre, fast enough to make up for those costs. And so it had to absorb those costs, and there we are looking at possibly a 10-cent hit to earnings. You know, Art Hatfield cut his earnings estimate for FedEx yesterday down to 53 cents a share. Now, on the flip side of all this is Morgan Stanley's William Green. He says investors are far too optimistic in a recent note. And in fact, he says FedEx's fiscal 2010 forecast, which we should get tomorrow, might very well disappoint investors because of the slow economy and because of lower shipping volumes. And last but not least, the wild card here on FedEx is what it will say about its pension expense. You know, it does this once a year where it comes out and updates how much money has to be put in to the pension fund that it runs, and it's very likely that it may have to put in some money, and that may come out of operating income, and that too could be disappointing to investors. Back on up to you guys.
Andy, thanks very much.